Small Business Accounting, prepared for and presented at the 2017 Square One Entrepreneurship Training Program. Square One is a program of the Center for Emerging Technologies. CET is an affiliate of the Cortex Innovation Community. Square One is funded in part by the Missouri Technology Corporation.
One of the first things I want to mention is just as you're setting up your accounting, just use a true accounting software, whatever that may be. QuickBooks is, of course, the most popular. It's louder? Sorry. No one ever says that to me. Okay, so QuickBooks is by far the most popular. Very easy to use, very user-friendly. Has a lot of great reports that are, just click of a button. So I recommend that for a place to start. One other just small piece of advice when you get started and you're hiring employees, hire a payroll service. Don't even think about trying to do your own payroll. It is a low-cost way to go, and it's so worth the money. So those are just my two big advice pieces right off the bat. If I can hit the right button here. All right, so the first thing I want to start off with is the chart of accounts. Your entire accounting system is going to be based on a list of accounts called the chart of accounts. It's going to cover your income, your expenses, assets, liabilities, and equity. So income, we all know what that is. That's what we're all trying to make. That's where we're headed. Our expenses are general operating expenses, day-to-day items, office supplies, your rent, interest expense. They can be cash or non-cash items. You'll also have depreciation expenses, and possibly, but not very often, bad debts or uncollectible debts. Assets, so these are your capital items. Manufacturing equipment, large computer purchases. These type of items will actually live on your balance sheet. We're going to get into that in a minute. You'll also have accounts receivable. That's also an asset. You'll also have liabilities, your accounts payable, your credit card, any notes that you may have, notes or loans, and then equity. So this is going to be stock that you sell to shareholders, and then your retained earnings. So retained earnings are just really the net profit from inception. So 4 basic financial statements that we're going to touch on tonight. So it's the profit and loss, which is also called the income statement, the balance sheet, the statement of cash flows, and statement of changes, or statement of retained earnings, it's also referred to. All right, so I've got the Widgets R Us P&L up here for you. In the handout, there's also a printout of this. And again, it's just kind of to give you a basic idea. Neglected to mention the other handouts on the chart of accounts. Since your chart of accounts is always going to be unique to you, and I'm sorry to back up, I've got 2 different charts of accounts listed. It's probably 4 and 5 in the handouts that I gave out. The first one you're going to see is just at the bottom. It's an example, just a very basic, could be just basic type of chart, has various expenses anyone would see. The second one, just to kind of give you an example of how unique they can be, is more related to someone who may receive government grant funding and has to stay within government regulations, direct costs, indirect costs, unallowable costs. So it was really just to kind of give you an example that there is no cookie cutter. It's going to be very different. So as you're thinking through setting up your chart of accounts, you're going to want to think about your specific expenses, what you're going to need to capture. So again, sorry about backing up on you, but then to get into the profit and loss.
Does everybody see the chart of accounts in the packet, the large version of it? Okay, just wanted to make sure.
Great. All right, so the profit and loss is going to show all of your revenues and all of your expenses. Again, this is just going to be, any income that you have less your expenses comes down to your net profit. That net profit is going to carry over to your retained earnings. Again, these can be cash or non-cash items. And it reflects a period of time. So you're going to run a P&L for the month, or for a quarter, or for a year, but it's always going to be a period of time. The other most popular is the balance sheet. This is where you're going to capture your assets, your liabilities, and your equity. And of course, they call it a balance sheet because it has to balance. Your assets are always going to equal your liabilities plus your equity. Pardon me, your assets at the top here, let me step over here. So your total assets are always going to equal the combination of your liabilities and your equity. So these are the two lines that are balancing when you're talking about a balance sheet. Does that make sense? Now on the balance sheet, unlike our P&L, which is a period of time, the balance sheet is going to be a point in time. It's going to be at the end of the month, the end of the quarter, the end of the year, but it's going to capture just one single point as opposed to a span. So when we're putting that all together, again, the income statement is it's going to show your income for the month, how you spent it. Your balance sheet is going to show you the value of your bank accounts, anything you own, and anything you owe.
So if you've taken a loan.
Correct. So yeah, so just to kind of put this in day-to-day terms, the income statement is going to have your paycheck. So that's going to be your income. And then your expenses are going to be your groceries, gas for your car, going to the movies, maybe the interest on your home loan. Whereas on the balance sheet, you're going to have an asset being what's left in your checking account. You may have the value that you already own of your home listed as an asset. You're going to have a liability that's going to show how much you still owe the bank for your home. And then if you own any money to anyone else, you may keep that there. Haven't paid the cable bill yet, so.
Judy, do you find that for startups that you're typically doing cash or accrual?
So,
And can you explain what cash and accrual
of course, thank you, good point. So it varies. Most of the LLCs will run on a cash basis because that's going to go through a Schedule C on your tax return. The difference between cash and accrual. When you're recognizing your expenses or recognizing your income, on a cash basis, it's when you pay the bill or when you receive the money. So doesn't matter when you invoice someone, you're not going to recognize that income until they actually pay you and you have that money in the bank. On an accrual basis, it's a little different. You actually recognize it when you invoice it. Doesn't matter if it takes them 6 months to pay you. So that's why you may have accounts receivable at the end of the year. You may also have to accrue for expenses because you have to record them in the correct period. So, for example, a lot of my clients that are on an accrual basis will have to accrue for legal expenses at the end of the year because we have attorneys who can afford not to bill us for 2 or 3 months at a time. So we'll accrue those expenses so they are actually captured in the correct time period, even though we're not paying them out until possibly next year or next quarter. Does anybody have any questions on that?
curious about that, what you were saying with the lawyers. So that is, I mean, I feel like I always would pay the lawyers in advance and then some. Are you saying that it's like,
Well, you may actually pay a retainer,
okay,
and you would actually carry that as an asset. So you have a prepaid there, and as you use that, then you would expense it at that time. So you'll be carrying it on your balance sheet. Let me just flip back here real quick. So you'd be carrying it on your balance sheet as an asset up here. And then as they invoice you against that retainer, at that point, you're going to make a journal entry that's going to say, okay, now I'm going to increase my expense. I'm going to decrease that asset. So now I'm recognizing that legal expense. Yes?
Set of questions. So is the reason to do accrual accounting, because it obviously seems more complicated, is you do accrual so that you're trying to match expenses and revenue so that you're recognizing them in the same time period as the events that cause that. So that like you're recognizing expense not when you paid for it, but when you did the things that caused you to incur an expense. Is that kind of the point, or?
That's kind of the point. And corporations are almost always going to be run on an accrual basis.
Because an
I would-
account receivable is an asset.
An account receivable is an asset.
So in certain circumstances, it may behoove you to do accrual accounting because then you can go, say, collateralize something. It would be part of being able to prove that you have assets to, say, a bank if you were trying to get a loan.
Yes. Well put.
But you'd also have to talk with your tax advisor
About,
or in an LLC situation.
correct.
About which
How that's
accounting
going to-
system you choose affects your taxation.
Exactly,
Which
because
is why you need
that
to
is,
both of them.
if you are accruing and you have that accounts receivable, that is income at that point.
And can
and
be taxed.
you
even though
will be
don't
taxed on
have
that income.
You just have that
Yeah, you just,
booked, so to speak.
right.
guaranteed income type of thing?
It's a promise of income because it can
Yes.
become bad debt if you can't collect on it.
If you can't collect it, then it
Right.
can become a bad
So,
debt.
you'd be taxed on something you don't actually have cash for, and you could potentially not collect on it. So you need to understand with your accountant, what does this allow me to do with my business? And with your tax advisor, what implications does this have as an LLC, especially if you're a single member LLC,
Correct?
and what that flow through is.
Right.
So our point tonight is to raise your awareness about these things so that you're not just like, la, 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 la. I've got expenses and revenue. I've got expenses.
Right.
It's never that simple. It's never that simple.
Exactly. Yes, and that's why you need an accountant to help advise you concerning the, no, let me step back here. Nope. Judy is not an accountant. Judy is a bookkeeper, and we are going to discuss the difference between those two items. So just to kind of, and I don't want to get too far in the weeds on these, by far the profit and loss and balance sheet, especially in a startup environment, are really going to be the tools that you're going to be using. Those are going to be the ones that really tell the story. There are, you will hear about statement of cash flows and the statement of retained earnings, which I also called a statement of changes earlier. It has, I don't know, about 10 different things you'll hear it called, and I can't rattle all of them off right now, but the statement of cash flows is a separate report divided into 3 areas. So it's going to cover operating activities, investing activities, and financing activities. So basically your operating activities are going to be anything impacting basically your P&L accounts, your income and expenses, your operating expenses. Your investing activities are going to be, for example, purchasing assets and or the sale of assets. So whether you're increasing your assets or decreasing your assets, it's going to be in your investing activities. And then financing activities, anything that's going to impact equity. Statement of retained earnings, I have to be honest, in my role, have never had to generate this. It's really just, it reconciles changes to the retained earnings account and details any changes in owner's equity. It's basically, you'll have your opening retained earnings, less any, for example, less dividends paid, and then you'll come down. I'm trying to remember the whole formula in my head right now. But you'll come down to the, so you'll take your add your net income, deduct any dividends paid, and that'll give you your ending retained earnings balance. So that's kind of the basic financial statements. So now we're going to get into who puts all this stuff in there. And it's bookkeeping versus accounting. And we always get along really well. It's always a great relationship. For bookkeeping, you can think of bookkeeping as really the day-to-day entry. It's just keeping up with the activity, making sure that you're entering and paying your bills, making sure that you're invoicing and recording payments. Any journal entries that you need to make. For example, we were discussing prepaid expenses. Those type of journal entries would go into the books. Processing payroll for your employees, so they get cranky when you don't pay them. And then reconciling accounts. You're going to want to reconcile your accounts every month. If I can stress anything, reconcile all of your accounts. Checking accounts, savings accounts, credit cards. You're going to want to make sure that you keep that up to date. Accounting, on the other hand, is a much higher level. They will analyze data, be able to analyze the cost of operations, tell you, do your tax preparation, prepare audits, and I'm not talking about the scary IRS kind, but financial audits your investors may require. Provide advice, concerning the impact of your financial decisions. So maybe you think it's time to buy your own facility, and what's going to go into that, and purchasing all this capital equipment and manufacturing facility, and they're going to be able to really help walk you through that. There is just try to meet some accountants, try to build a relationship with those people. They are invaluable, absolutely invaluable.
So if you're doing your own taxes, like as a person.
No, just because mom's best friend has been doing your taxes for years.
Right. And because you have TurboTax and you've done your
No,
taxes for
don't do
years.
it. It's there's so many things available and so many things that you have to know. It's just, it is worth its weight to have a tax professional prepare your return for you. I almost think Michelle might be nodding with me back.
Yeah, Chrissy says so she can do your own taxes effective from me.
Don't do it.
Well, I just know a lot of us, before we start a business, it's not uncommon that you have been, right? There are a lot of things I'm frugal on. I've always paid somebody to prepare my taxes, because I just don't want to have to figure out what lines C
Right.
and B and D and F and, all that, right? But if you have been accustomed to doing your own taxes up till now,
It's hard to change.
this is going to be even just forming your LLC, even if this year you have no income and you have no expenses, this changes the complexity of your personal finances.
It
and your
absolutely
personal
does.
taxation status. So
Absolutely
it's
does.
good to meet, and folks like Judy and Michelle can say, oh, this is an accountant who works with people who are sort of at your stage of development. You don't need one of the big firms. You need somebody who can sit down with you and say, okay,
Absolutely.
when you decide to do this is what's going to happen next.
So Judy, if we're working with you and you're our bookkeeper, when do you bring an accountant into the picture? Because it's obviously not something you need every day.
Got it.
Is it when you do your taxes? Is a newbie company?
Right. So yeah, a lot of times with my brand new companies,
Yeah.
yes, that may be the first time that we get them on, is for that initial year tax return. And basically, you want a bookkeeper that can keep your books up to date, that everything is reconciled, that can turn those books over to the accountant, answer any questions that they have, because you want to keep the amount of time they have to spend on that return small. Christian?
Hey, Judy. So then, what are accountants like? Do they run on the same ballpark as a lawyer?
It varies. It really varies.
I can speak to that a little bit when I talk.
I appreciate. Yeah, I'll let Michelle
And
take
then
that one
one
for
more
you.
question then. If I was understanding you right, when I do my taxes now this year, I have an LLC I'm a part of, but I also have to do my personal taxes. Were you?
LLCs, your personal tax, an LLC flows through your personal taxes. So you need to make sure your tax advisor knows that you have an LLC.
Yeah. So
If
there's
it's more than just
there's
you,
two.
it means
Yeah.
it's
So there's two different
multi-member.
things to consider here. So if it's a single member LLC, you're going to have a Schedule C that's going to funnel through your personal return. If it's an LLC partnership, you're actually going to be issued a K-1 by the company. So the company will have its own return prepared and issue you a K-1 that you will then file with your personal return.
So this is something you and I are going to do together?
Yes, yes it is.
All right.
I will also say, if you have, and most of you have not, and I'm not advising you to do this, but if you have left your job and you are working independently, you're now going to be paying quarterly taxes, right? And so you should have set up an LLC because we want you to be able to operate in that way, right? And so that's an instance where I actually made an appointment with my accountant. I don't even have a bookkeeper yet. I made an appointment with my accountant and I said, this is what's happening. How is this going to affect my taxes this year? I've already paid in as a salaried employee for 3/4 of the year. My husband is a salaried employee, but I am starting as an independent consultant. How do I pay quarterly taxes? What is it going to do? All that kind of stuff. So yes, you do want to talk to
You're
them,
wonderful.
but I made the mistakes the first time around. I learned from my mistakes. But like sort of when do you bring that accountant in? It depends on your own personal situation, but if you are no longer a W-2 employee, that's a really good time to have a conversation with an accountant as well.
Oh, I have some anecdotal evidence about this since I set up my LLC. When you form the corporation the first day, there's a clock that starts ticking about your electable taxation status for your corporation. In Illinois, it's 75 days. So I set up the corporation, and then I just happened to get with the CPA in just enough time, because she's looking at it, she's like, when did you found this corporation? And here's the date, she's like, well, we gotta get this in now, because, you only have like 1 day left. So I had to rush up there. So there's all these like ticking clocks that may be going on without your notice. So I would say
When in
75
doubt,
days.
talk to someone.
Yeah, absolutely.
CPA, but don't like wait around for months and months and months, maybe like 1 month, 6 weeks, then start talking and get somebody.
Yeah, and don't be afraid to talk to multiple people and ask people for referrals. I mean, there are a lot of good firms here in St. Louis. Talk to people, find out who they're using, if they're happy. A lot of times, and the accountants, they're going to send you a bill for that tax return. But generally speaking, unless it's something very involved, you can pick up a phone and call them all year round.
Just not during tax season.
Just not during tax season.
So you can call it, just don't expect a call back.
There you go.
Don't form your LLC in April.
Yeah.
Or January.
Or January, or yeah. So when you're thinking through, do you need a bookkeeper? I mean, when you're early stage, just again, if you're going to start it out yourself, use the right software. Be sure to keep up with it. If you find that doing the books is taking away from the time you can spend on your business, doing what's really going to grow your business and move you forward, it might be time to talk to somebody. Again, talk to other entrepreneurs, get referrals, meet with people, make sure you click. If you're not sure you're keeping the records correctly, definitely talk to somebody. If nothing else, everyone that works at least around this area is perfectly willing to sit down and talk to you, won't charge you a dime. Anything we can do to help, that's why we're working with startups. And if your accountant is performing your bookkeeping duties for you, you're paying too much for that. Don't have them reconciling your bank statement or you know, preparing your invoices to send out. Do you need an accountant? We've already said yes. Need an accountant. Again, they're going to prepare your tax returns, and they're going to perform audits. When you start getting investors, they may require an annual audit. They want to make sure those books are being handled correctly, that there's nothing sneaky going on. So you're going to have that done. If you are grant funded and you receive more than $750,000 in any calendar year, you're going to need an audit. It's a whole different type of audit. So again, you're going to want to talk to accountants based on the type of income, the type of company that you have, and make sure that they're available to perform all those services, because you'd really like to have the same firm working with you on everything.
Do they do the audit all 3 years?
Oh, I'm sorry?
Do they do the audit all, like every year you get more?
If you have if you bring in, use $750,000 in a year. Now, if you receive a $750,000 grant, but you spend it over the course of 3 years, you're not required to have that audit.
Okay.
It's only if it's $750,000 in a single year.
If you do $750 in a single year, 3 years in a row, do you have an audit 3 years in a row?
Yes, you do. Look forward to that.
Yeah.
Yes, ma'am.
Can you please tell me at what level should one be educated enough to know what to look for in case you're potentially dealing with incompetence or potentially dealing with dishonesty in terms of?
Well, you're going to want somebody that is very open in communicating with you what they're doing. Now, are you saying from the accountant side, perhaps, or from the business owner side?
At what level should we be educated enough to at least be able to ask questions or to know if there is a red flag, things of that nature, and what might be a good way to speak? I personally am not doing that.
Right. Well, I mean, you're going to want to read these financial statements, and any questions that you have, you're going to want to, get good, straight, direct answers. If you have any suspicions, if you can't, you don't necessarily have to be good at math. If you can't get a copy of the check register and the bank statement and look at them side by side every month and say, okay, yeah, this check cleared, I know what this was written for. It's when they are hesitant to give you those documents, show you those check copies, that could be a problem. Again, you're going to want to build a relationship. Generally go with your gut. I don't have a good answer for when you're going to recognize a red flag, but just make sure that they should be giving you financials, anyone you're working with, be it a bookkeeper, be it an accountant. If you ask for something, they should give it to you within a reasonable amount of time, and they should be able to give you the detail and tell you what every charge was for.
And Judy, even in a small shop, meaning you yourself and I,
Right.
You can work with your bookkeeper to say, well, I'm making the deposits, you're doing the bank statement reconciliation, we're sort of getting two eyes on things.
Yeah, and then,
So you're not putting everything into the hands of your bookkeeper.
Right.
You're not writing all
Right.
the checks and depositing all your.
and don't just let them point and tell you to sign things. I mean, be sure you know what you're doing. And Christy makes a great point. Any time you can have some sort of segregation of duties, be that, again, you open the bank statement and you review it, and then you give it to the bookkeeper to reconcile, and then you get that back with the reconciliation so that you can make sure what cleared. Most of the banks now, even with online banking, you can log in, click on a check number, and see what that check was written for. Not a bad idea to spot check those. Just take a look and make sure that, it's entered in QuickBooks as, payable to Joe Schmo, but when I clicked on it and read it, hey, that was made out to Judy. How come Judy wrote herself an extra check and wrote it in the books as Joe Schmo? So definitely, just keep an eye on those types of things, spot check. anytime you have a bad feeling, it's not a bad idea to talk to somebody. Go to your accountant and say, hey, I want you to take a look at this, just see what you think, make sure everything seems cool. Oh, again, other things they can do for you. If you're issuing stock, they can give great advice, help keep your cap table up to date. Another great resource is, having a CFO that you can work with. We have a lot of great CFOs here in St. Louis that can assist with these types of things. Not to mention, accountants as well, keeping your cap table up to date. And then, if a large company wants to license your technology, it's a great time to have them look at those agreements and make sure that, you're getting a good deal. So if you decide to work with a bookkeeper, one rule, just communicate. Just don't be afraid to get on the phone. Some of my clients, I drive them crazy, we have emails going back and forth, and finally I'll just pick up the phone and, let's chat about this. What are we both saying? Are we saying the same thing? Are we saying two different things? Keep all of your receipts. All of the receipts. Gotta tell you, it's amazing, some of the things, and sometimes, if you keep them in a shoebox, I will be happy to get them if I get all of them. So, keep the receipts. Be careful about the thermal paper. It disappears. It's disappearing ink. So there are some great apps now that you can just take a picture of a receipt. You've got that record. There's, really inexpensive scanners if you prefer to just scan them, keep them in an electronic file. It's just a really good way to keep those records so that they don't disappear. Yes, sir?
Is it okay to throw the originals out once you scan them?
Yes.
Is there a rule for under a certain amount? You go to Starbucks for $5.
Yeah, what is it? I don't know. What is this? Is it 20?
I think the IRS considers some things under, the rules have probably changed, but like $50.
Is it 50?
Maybe. It's like 25 or 50.
Okay.
For some reason those numbers are jumping out at me.
Yeah.
But a lot of times, we just kind of come up with a policy for the company, and then we just follow that.
Got it. So yeah.
I'm not an accountant, that's my preface, but the accountant that we had used told us that it was 25. I don't know if they're right.
Yeah.
Is it? Okay, great.
I was thinking
Okay.
25 or 50 money.
Yeah, I was thinking 20, so
And he
25
told us
or.
25, but I
okay.
gave him a shoebox full of the little $2 parking receipts.
Got it.
No way he was dealing with that.
But yeah, we like receipts. We're not opposed to receipts. Feel free to give us all the receipts.
We had a good question in back. She asked,
Oh, yeah.
$25 for income or $25 for expenses? So $25 is the receipt limit for expenses, but in terms of revenue, all revenue backup, not even 50 cents, you need backup for.
Correct.
Especially if you're a cash business, that's a big issue. So.
Yes, ma'am.
The receipt, how long we keep it? How many years?
Kind of rule of thumb, 7 years plus the year you're in. So yeah, don't want to beat this too hard, but again, really it's just about communication. Just, if you will let us know what you need, we are happy to get that done for you. It's much harder when we don't know about it for a while. I will not share any names, but recently had a client that contacted me, and he had received a Phase 1 grant, had gone through it. He'd filed all of his quarterly reports with the government. He'd filed his final report, and he got a notice that they were going to fund his Phase 2. Almost $1 million. And he needed to send them financials. So he sent them his quarterly reports. And they said, no, we need financials. We need a profit and loss and a balance sheet. And he called me and he says, I don't know, I don't have a profit and loss or a balance sheet. I said, well, how did you track your expenses? Did you use like QuickBooks, even Quicken, something? No. Okay, spreadsheet? No. Check register? No. He just wrote checks. Kept nothing. And I'm not kidding, he kept nothing. We basically had to rebuild his activity from bank statements and credit card statements. Yeah, and that is never going to pass muster.
Do, for like the science people, you receive a lot of times, is that like from like Fisher or something, right?
Mhm.
Like, I can just download those, is that
Yeah.
something that's okay?
Yeah.
Like,
Absolutely.
because the invoice is different than the receipt though, right? Or am I mixing those two up for
It's-
the science?
Right, missing the
So
packing
it's
slip and then-
Yeah, because you get three, I get an invoice, a
Right.
packing slip,
Mhm. And an order confirmation.
yes. So
Okay.
which one of those for me is a receipt or?
The invoice is actually the receipt.
Okay.
So if it'd be like if you paid by debit, we'd call it a receipt. If you are writing a check for an invoice, we're going to call it an invoice, but that's the same.
Okay.
It's whatever is going to capture the total expense. And that's inclusive of your tax, your shipping, all of those types of charges. Yes?
What about like these little services you sign up for, like web hosting service, like stuff through Amazon, Yahoo, Microsoft, and it's just this monthly rebill on your credit card, right? If there was never anything they sent you to start off with, you never get anything from them, you're only knowing it's there because you're seeing it.
Right.
There's no record of that stuff.
I generally recommend,
So I'm putting it just in an Excel sheet now, but
Right.
there's nothing to back that up other than a bank.
yeah, and you should have gotten like an order confirmation or something at the beginning, so they didn't email you anything like that. Yeah, right, I know. How much email am I supposed to
Right,
read?
yeah, like you gotta.
Exactly, yeah, they send
So
you.
something like that, if someone would ever say, will prove that this was a business expense, right? And you would then pull 7 years of bank statement showing you coming out, like. that-
Right,
really
and the
makes
odds
sense.
of, the odds of that triggering, probably not.
Well,
But from today forward, and I'm
Yeah.
not joking about this.
Yeah,
okay, I've done it.
Everything you do, you should have a piece of paper. It doesn't have to be a literal piece of paper, it can be a virtual scanned
yeah,
piece of paper.
exactly.
But you should have something that corresponds to every activity.
So I've got,
One more little question.
Mhm.
Maybe this is too much back. How long do you think you can run a negative Schedule C before they say this is like your passion project and not your business, right?
I'm gonna let finer minds address that.
No, we can wait.
Michelle,
Well, okay,
did
so
you
I
hear?
heard part of it, because I
So-
was
so I-
answering another question,
So I
sorry.
said, how many years can you run a Schedule C negative before they say this is like your hobby or passion project?
Oh.
This is not your business. Because they want their money, right? They want their taxes.
Yeah, so I'm a CPA, but I don't do taxes. I do other things. So that's kind of a real specific tax-related question. My recollection is 3 years. However, that's very, 3 years is, when you say Schedule C, so that means you're an LLC?
Correct.
Okay, so it's running through your 1040.
It is.
And,
Not
yeah,
an
and-
1120, but one day it will be, hopefully.
okay, and so basically, yeah, if you have not
Showing a profit. You're only showing loss.
shown a profit, but you've also not issued any stock, and you're the sole member,
Correct.
then technically speaking, you have to answer some questions about if this is a bona fide business and if it's a hobby or not. But I probably, if you're in this program, we're not talking hobbies, I'm
Okay.
guessing. But you probably would need to give me a little more
Well, I
details
mean, just
around
because,
it.
all these
It's not
companies
just
will
a
not be
blank-
profitable for a while.
It's not necessarily just a blanket,
Okay.
oh, sorry, you know.
Uh-huh.
Yeah,
The IRS is not gonna force you to fail. Like, if you continue to need capital to grow your business and you haven't
And you're using
shown
your
a
own-
profit,
yeah.
that's a totally different situation than trying to offset your W-2 income because you have a photography business on the side, and you're really not really trying to market
And
it
you're
or
going
even
to
make
Napa
money at
every
it, you're just trying
weekend
to
to shoot weddings.
expense, yeah.
Okay, got it.
And what ends up happening basically is you're capped out at how much you can write off based upon the income you're pulling in. And so it's not really that they say you have to now call it a hobby, it's just that now you're capped, I'm sorry, you're not gonna be able to deduct these. You can't carry your losses forward or back. So.
I have a question. I ran into something similar when you were talking about the accrued, and sometimes organizations will hold a check and not, and it doesn't show up, well, it'll show up on your expense because you wrote the check, but it's not deposited or withdrawn from whatever account.
Right.
I have an employee that actually didn't deposit a payroll check, and this is going back into December. And so we did our taxes, but we reported that, that it was an expense. But now we have to go back and change that because he never deposited the check. So how will we clear that up?
So, did he ever deposit or get paid for that in this year?
I gave him a check.
A new check. So you
No,
basically.
No, I never gave him a new check.
Oh.
I gave him a new check. He never said anything about the check. The accountant that I hired actually found it, because I do the reconciliations every month.
Right.
But the accountant that I'm working with, we did the taxes for December, our quarterly taxes, but this, we're doing our taxes this time around. And he never deposited the check, and this is going back into December.
Was it on his W-2? Was it reflected on his W-2?
Absolutely.
Well, if you reflected it on his W-2 and he was in receipt of it in December, it's logical that it should be taxable to him and therefore deductible to you.
Okay.
Because you would have forced him to pay taxes on it because you issued him a W-2. So therefore you are entitled to the offsetting expense.
Okay.
Unless he filed, I don't know, a corrected W-2 and said, no, I didn't get all that money.
Unless he's rich.
But I don't know.
Yeah. So
he didn't get paid, he just didn't care.
You can continue to follow up offline on that.
Yeah, I just am confused.
yeah, me too.
Yeah, no, that's interesting.
And that only happens when you have a live check as opposed to direct deposit, which is why it's really good for companies to have direct deposit.
Right.
So not worry about live checks, and then you don't have to reconcile any items with your employees, you take a while to cash the paychecks.
Yeah, agreed. Yes, ma'am.
Could you recommend a good app for receipt scanner, like anyone that you like or know of?
I'm sorry?
For scanning receipts, can you recommend one that you like personally?
Can I think of one off the top of my head?
I was just looking.
Is Concur one?
I'll have to,
Concur is a good one.
I'm sorry?
Concur is a good one.
Okay. Yeah, I'm not familiar with that one, and I can't think of the name of the,
And if anything comes to mind, we send out weekly emails with stuff.
Oh,
so we
great.
can always add additional information.
okay. Yeah, there is one, it's great, because it captures everything, and then it'll actually create an expense report for you if it's reimbursable items, and I just cannot think of the name of it right now, but I'll get it for you, and I'll give it to Christy.
Thank you.
So, yeah. All right, were there any other questions on it? Did I miss anybody? I'm sorry?
What this doesn't mean here. Why we need
Oh.
this?
Got it. So that would just be if you were paying an attorney, so that'd be your legal expenses. So generally, I get a little confusing on my chart of accounts. So she was just asking why I had split out legal and accounting, and I tend to get into a little too much detail maybe. So on the P&L example, she was noticing under professional services, I have subcategories. So I can roll up those expenses and see what I paid on professional fees, but then I can split it out and see how much was accounting versus how much was legal. So I just,
I need an accountant, but I have to hire the legal.
and at some point, yeah, you're going to need to have a corporate attorney as well.
And I personally think that that's the appropriate level of detail, that you want that level of detail to know, this is how much it takes.
How much you're spending on,
for
yeah.
different things.
When you file the tax and the company buys knowing now that you are not required to show balance sheets to the IRS, most independent. And at some point, you switch over to bigger operation, and where do you start? Not instructing, very carefully the tools, and then you have to start asking from some numbers. What would you put up for a small business? Or just start from zero?
My recommendation is from the minute you start your business, you're going to want to be keeping those records. You're going to want to be able to go back to day one.
So from the government's
So-
point of view, you are never too small.
Yeah.
You are never exempt because you're small. You're never exempt because you're nonprofit. You're never exempt because you haven't made any profit. There is no special, like, you're too small for us to not require that level of detail.
Yeah.
If you're paying the taxes, who else would need that information? If the taxes were paid on all the income and all the required numbers,
Mm-hmm.
then you have money in the accounts, you spend the money for it.
Right.
And then there's not going to be as much money in there as there was supposed to be in the beginning.
Right. So you're really going to want to go back and, look through the checking statements, find out what that money got spent on. You're going to want to have somebody that can really go through with you and just put that back together. Because
Who is going to need that information?
Potential investors,
Mhm.
if you're going to raise money, a bank, if you're going to get a loan, and a partner, if you end up expanding beyond just yourself. And you, as a business owner, you should be using your financial statements to make evidence-based decisions about your business. Should I spend this or not spend this? Should I buy this? Should I not buy this? Can I grow in this way or that way? What are my trends? Your financial statement should be active documents.
It is very common for many of the people that I know is to run operations just like that STTR person on page 1.
Right, and we're saying don't do that.
Yeah, don't do that.
Don't do that.
that was my best example of don't do that. But again, it could become an issue if you aren't going to have that documentation and support, but it would really be wise to go back and rebuild that activity now while it's early and capture everything that you can.
We have time for one more question.
I have one more.
Mm-hmm.
How important is it if we have a business checking account, but obviously we're using our personal credit cards and things like
Mhm.
that, roulette to run our
Right.
Do we need to be putting that money in our business accounts and then spending it out of that? Or can you still just spend it off your credit cards? They're legitimate expenses.
They're legitimate expenses, and a lot of people do, have to work that way. Your company can't get a credit card right now, But yeah, as long as you keep all of those receipts and complete a substantiated business, expense report,
It doesn't matter.
it's still a legitimate, and then you just reimburse yourself, or, if you can't afford to reimburse yourself
Right.
for a while, then you just, book it to the draw. All right. So is that all the questions? Great.